This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft. Thank you all so much for tuning in and for the continued support. If you like what you hear on the Planet MicroCap podcast, please take a moment to rate us 5 stars on Spotify or Apple Podcasts. It really helps more folks discover the show and join the MicroCap investing community. First off, thank you to everyone who joined us at the Planet MicroCap Showcase Toronto in partnership with the MicroCap Club. This was just an incredible event celebrating the best of the microcap community, not only in Canada, but all of North America and maybe just globally. So just truly thank you all. We had so much fun. I think talking almost to a person, everybody really, that sounds like got a lot out of it. And it's just so fun meeting all of you in person, or as many of you as possible. So thank you again for all of your support, every single one of you. We're actually already gearing up for our next big investor conference, the Planet MicroCap Showcase Vegas, in partnership with MicroCap Club 2026, happening June 16th through 18th, 2026 at the Bellagio. You will want to be there. I'll be sharing more information as we go on here, and I'll see you in Vegas. Now, my guest on the show today is Doug Porter, portfolio manager and senior research analyst at Acuitas Investments. Doug and his team recently published a new white paper titled The Case for MicroCap. For most of you listening in, you're already a diehard MicroCap-per, and we've all succumbed to the altar and the merits of hunting in inefficient markets. Having said that, I invited Doug on here to not only remind us why we are here, why we hunt for the best investment ideas in our neck of the woods, but more importantly, in my opinion, to showcase why in 2025 the case for investing in microcaps has merit as a place to build wealth and allocate capital. Doug breaks down the structural inefficiencies and long-term opportunity in the microcap equity markets, a segment that remains largely ignored by big institutions, but continues to be fertile ground for alpha generation. We discuss why microcaps have historically outperformed in 84% of rolling 30-year periods, the critical role of active management in filtering out the riskiest names, and why Doug believes we're in the early innings of a new cycle that favors smaller companies. Doug also explains how stable operators, profitable cash-generating niche businesses are among the most compelling yet overlooked opportunities in today's market, and why a dedicated microcap allocation can offer diversification, M&A upside, and even a liquid alternative to private equity. Finally, we cover Acuitas' approach to identifying skilled microcap managers across the globe and how this ecosystem of small, research-driven funds continues to uncover value where few others are looking. Thank you again for tuning into the Planet MicroCap podcast, and please enjoy my conversation with Doug Porter. Doug, thank you for joining me today. How you doing, man?
Thank you, Robert. Yeah, I'm well. I appreciate just the opportunity to come on to your show.
No, listen, your family. Let's go. Let's talk about this. We've known each other a long time. We love Acuitas, and so look, I saw you put out this white paper. I think it was a couple. I guess it was a few weeks ago now. And it's pretty much an update from Acuitas on the case for microcap. And I have my base questions that I want to ask based on actually everything that was written up. But I thought I'd start off because look, this is MicroCap podcast. People who are listening here for the most part are like, yes, we agree. The case for microcap. Duh. That's why we're here. So in your opinion, what do you think has been missing from these types of white papers or these types of thought pieces about like what is it about microcap that's still just not cutting through that all right, we need to keep updating this and keep reminding people that there is a case for why you should be looking at microcaps?
Yeah, it's a great question. And it's one of those things where, especially since we haven't had a period where small microcaps led on an extended basis for a while, I think oftentimes there's those folks like us that are in the space and deep in the space, but I think sometimes it's just nice to step back for a second and talk about just some of the basics of why we're investing in this area of the market, why it's so interesting, because for most it's overlooked. And just to remind folks of kind of the building blocks of why investing in the space and what it means over a long-term basis. So really from an asset allocation basis for your regular investor that's looking to, improve their opportunity forward in terms of increasing their retirement income.
100%. So, I mean, it comes at an interesting time where, there's been some frothiness, right?
Yeah, absolutely.
Some weird, interesting trends, that remind me of things, leave it at that, right?
Yeah.
So it is kind of, I definitely see that perspective of like, hey, yeah, there's some weird frothiness going on. It's kind of nice to, let's go back to the base. Let's make sure like let's not let's not get caught up in any of these, weird hype trends or anything like that. Like, let's remember why, what our core is and what we're really looking for. Was that part of it as well?
Yeah, absolutely. The other thing is that it's going to get more attention as we see small microcap this year to date leading large caps, specifically in the US, where it's been a long time since that's been the case. There's going to be more people looking at the space and then recognizing and then coming back and just looking at some of the long-term drivers of return again as they're kind of reorienting themselves to the market.
Very good. All right. So, I'm going to start with the big picture, with the paper. Why do you think microcap stocks still do remain one of the most neglected areas of the U.S. equity? I mean, not just U.S., geez, and talk global now. And why does that neglect actually create opportunity in your opinion?
Yeah, it's a great question, and it's kind of the basics here. As we can appreciate, you have larger asset bases, and to be able to invest in some of these smaller parts of the market, it becomes challenging from a liquidity standpoint, and also even just as we think about it in terms of professional investors, in terms of their ability to manage a business. So being a big business, you have to essentially you get pressured from a business standpoint to scale your products so that they make sense from a business standpoint. That size and the asset base associated with that becomes really difficult in areas like microcap. And even when we think about it from the sell side and writing research reports on small companies, oftentimes those get overlooked for reasons related to just the size of the business that they can do. So your coverage kind of ultimately just moves up cap, your products move up cap. And these areas, as a result, that's why they're so interesting, especially for really focused, dedicated investment strategies.
You also made the point that large institutions tend to avoid microcaps because they can't move the profitability needle. How has that shaped some of the inefficiencies that we see today, and why do they still persist?
Yeah. So since they can't invest in that space, you also, as I mentioned before, you don't get as many eyeballs, you don't get as much research written on the space. So ultimately, what you end up getting is you have fewer institutional investors overall in those spaces. So, an area like microcap, you have a significant portion of the universe that is retail oriented or maybe just part-time investor oriented. So as a result, you have more potential for mispricing, ultimately because you just don't have really focused, dedicated effort in terms of institutional investor that's getting paid to generate returns investing in that space. So ultimately the size of the mispricings and also even just the degree to which information moves in the market. So something new comes out at a company, that information being disseminated across the market, the time gap is longer. So ultimately you have more opportunity to make money.
What's funny is like you going through the paper and I have a number of other questions, but you could put this paper 10 years ago and I'd say most of this is probably exactly the same,
Absolutely. Yeah.
I mean, just bigger picture, why is nothing changed? I'm trying, we're trying to like we're trying to raise, bring some more awareness to the space and how there's really great opportunity. But I mean, does this keep happening because there's just, I guess you'd say so much, whether it just the history of how microcap penny stock has been perceived, layered in with some of these hype cycles that always get just absolute, it's always microcap that kind of like just kind of takes it farther than it should, in many ways. Like I just why has nothing changed in your opinion?
Yeah, I think part of it, even just within the last 10 to 15 years, you have had this move of the bigger firms have grown a lot bigger, and so you have a lot more of the capital that's moved to the larger firms, and those firms by nature, as we've talked about, they have to do bigger things. So the case for them running money down in the less efficient, less liquid, frankly, parts of the market is more difficult. So then they naturally tend to move up caps. You just don't have as much, you don't have still have as many people investing in the space with a real focus. So those lessons, they haven't changed. They aren't likely to change, which makes it such an interesting area for the few investors that really want to focus their time and align themselves in this part of the market. And the other thing related to that is just being able to roll up the sleeves and really spend the time and going to the Planet MicroCap conference and talking to companies and really getting to know the companies. That takes a lot of effort. And by nature of the effort, you have to get more focused investors and more focused investment firms.
Even for the part, and I tell this to a lot of investors that come to our events for the first time, and look, it's not trying to just be like self-serving, companies who come to the conference, whatever, is like you got to get the reps in. Like if there was one thing I learned the most in microcap and investing and all that, and granted, it's my job as being in the media and whatnot, has been talking to management and doing as many of these interviews as possible, and just being able to kind of get a feel for who these management teams are and how they speak, and just knowing the right questions to ask. Like it's I try my best to show people it's really not that hard. Like you can kind of tell a bullshit artist from someone that isn't. It's really quite easy. But then also it's sometimes not. I guess there's some that are pretty good.
One other point I think about is the effort that it takes, and the cost that it takes to go out and actually do the work and do the work well, especially in a day and age where in an industry where fees are generally coming down and where we have also technology and more distraction. Just the real dedicated effort associated with that, it takes so much more work. And I guess the incentive to actually try to do more and do more things and spread yourselves out thinner, that is kind of driving also some of the interest away from areas that are less liquid, and ultimately just takes the person that's really focused and dedicated into the space that really wants to do the work and generate what we always talk about, which is the edge, the perspective over some of the money that's sloshing through there that might be a little bit more emotional, might be looking at charts, not really understanding the story. That edge we see, and historically we see that in excess returns for microcap strategies. I mean, excess returns historically have been 3 to 4%, and that is on average. So if you get an even more focused, low asset-based manager that can invest in the really interesting part of the market that is less liquid, we've seen managers that have been able to generate returns well in excess of those averages.
100%. So, I mean, look, despite the strong long-term track record, many investors do still see microcaps as too risky. We kind of hit on that main point, but how do you respond to that perception though? Still, like even amongst, somebody could be looking at a swath of, 10 really interesting, what we know because we've been doing them for a while, of like quality names, and still see them, it still might be too risky. And what does the data actually show?
Yeah, it's a great question. Actually, even very well-resourced, capable allocators bring up this question and have these debates. And the one thing that we always want to point out to people is oftentimes that analysis that highlights the risk is looking at the entire universe of stocks. And we know within that universe of stocks, there's a section of that stock universe it's not well invested in for good reasons. They're unprofitable companies with high levels of debt. They drive a lot of the volatility, and most active managers avoid those types of stocks. So our point being, your active portfolio generally has lower levels of risks than if you were looking at that historically and looking at the entire universe. Excuse me. So you're getting the returns, but you're actually getting a lot less risk.
Absolutely. So, I mean, the paper notes that microcaps have historically outperformed large caps in 84% of rolling 30-year periods. What would you say explains that consistency, and what drives the returns during the other 16%?
Yeah, it's, we always think about the paper as the Fama French paper. So it was published in 1992. Really what it pointed out was the price anomalies associated with smaller and cheaper stocks. And that is we took a look at that, and that's oftentimes called the small cap effect, but what we'd say it's actually the microcap effect. If you look at the microcap index in the bottom three deciles, over 90% of the microcap index represents that smaller part of the market, whereas the small cap index it's only about a quarter of the index actually represents that small cap effect. So this is something and if you look at that part of the market, that smaller, cheaper part of the market, what we'd call microcap, like you mentioned, over time it outperforms the larger stocks, and it's related to just being overlooked and underappreciated. So there's a valuation case for that, and there's also just a case of just not having as many eyeballs on it.
You also described four categories of microcap companies: stable operators, fallen angels, emerging growth, and story stocks. Which of those segments looks most compelling right now?
Oh, I mean, given the run up, I mean, you alluded to this a little bit earlier. I mean, you get these periods, and actually, Chris Tesson, my colleague, recently wrote a paper on this. It's also available on our website within our white papers. It's just you get these periods where you get a lot of theme-based investment moves. So a lot of the leadership being driven by AI related infrastructure. We'd call these oftentimes when you get some of this leadership story stocks, even some of the meme stocks. Those kinds of stocks have driven the market ahead, where some of the more interesting stocks, and these are the ones that are really overlooked, probably the most overlooked right now, and the part of the microcap that isn't typically associated by your average investor is, we'd call them stable operators. These are companies that are generating consistent cash flow, profitability, but they're small because it's because they just address a small part of the market. So they're not going to be big companies, but they're very well-run companies, and those have largely been left behind. So those are, I'd say, some of the most interesting things that we've been seeing, or at least been seeing it through the lens of the managers that we research.
Absolutely. So active management seems to be a big theme here as well. You mentioned microcap managers have averaged more than 450 basis points of annualized excess returns over the past decade. What gives skilled managers such an edge in this space? It seems
it's a great question.
Yeah, it seems painfully obvious probably to most of the folks who are listening here, but it's important to understand that. And for those that think they can just be a passive microcap investor, that's really why I'm asking this question.
Yeah, one of the things that we emphasize at Acuitas is having an approach. So having something that's it's grounded in what has worked historically in terms of what kind of characteristics you can associate it with good companies that are going to outperform. So the focused manager has an approach. They have a process around that approach that keeps the emotions at least limited. So in the sense of, they know exactly the kinds of companies and the characteristics of companies that they're trying to target. They're doing the work on those companies to generate some edge, and they're very consistent in their approach, and I'd say also aware of how they can make some mistakes in terms of how they invest. I'd say that kind of effort has a huge advantage of maybe a part-time investor that is kind of just maybe reading the headlines, and potential to have a little bit more of an emotionally based response to what they're seeing in the market on a day-to-day basis.
Very good. So, I mean, liquidity and capacity are often cited as barriers for larger investors. How does Acuitas think about fund size, position sizing, and liquidity when investing in microcaps?
Yeah, we try to think about there's a number of different ways to approach the market. So a number of different ways to win. So, and I think what's really important to note is that it depends upon your approach. If your approach requires very quick buying and selling, and you're typically in maybe some of these stocks that have lots of momentum and lots of really kind of high turnover investors alongside you, you are generally you do not want to manage as much money, versus maybe a manager that's much more patient, looking at low valuation, quality of company that has generally lower turnover. They can, I'd say, on a basic basis, they can generally manage a little bit more money. So we think about it at the product level. So it also is a function of how many holdings do you have. So if If you have 10 holdings, it's going to be quite different than if you're investing with 60 holdings. So I'll say, though, generically, we'd say 250 to 500 million is kind of ballpark of where we typically see capacity for a strategy. But it does depend upon the resources and your approach to stock selection.
Absolutely. I'm going to come back to you in a little bit on your assessing managers and stuff like that, but I'll come to that in a sec. Another point that you make is that most small cap funds actually tend to lean more towards mid caps. How one that just, I mean, yes, I'm seeing the same thing too. But like, how underexposed are investors then to true microcaps today when you're kind of seeing this trend of, we're small cap, but yeah, we look at companies that are 4 billion in market cap for sure.
I think the timing of your question is actually really great, especially coming off our previous comment where if you're trying to build a business case for your product, one of the ways to manage more money is to manage in larger stocks that are more liquid. So I think the business case is part of the reason why managers tend to gravitate upwards. And then there's also things like just getting comfortable with the companies you own and those generally growing over time, and maybe you're not doing as great a job of sourcing down the market cap spectrum. The average small cap strategy has about 20% exposure on average to stocks under 1.5 billion in market cap. That's what we'd say is not getting you the exposure that you intend as someone who's looking for those smaller, cheaper companies, whereas your micro cap strategy is giving you, I think it's over 80% on average exposure to those types of companies that are under 1.5 billion in market cap. But some of it's related to the business, some of it's related to over time just getting comfortable with stocks, some of it's related to just doing other things. And so oftentimes a good small cap investor who builds their record in micro cap, the assets grow, they have to move up for liquidity reasons, and then they start to, one of the typical moves for a small cap manager is start to manage a small mid cap strategy. So just by virtue of you having to extend your research coverage up the market cap, that's taking away from the really interesting part of the market, especially since you can't own as much of them when your business grows.
You also highlight the diversification benefits, that microcaps move differently from the rest of the market with much lower correlations to large caps. How does that translate into better portfolio construction?
Yeah, so you get with lower correlations, you can ultimately just diversify your risk away. So, and also related within the microcap market, you have lower correlation between companies. So you can own fewer companies and you diversify away more of the stock specific risk just with fewer companies. So it's from an asset allocation point of view, especially when you think about the active return opportunity, if you can historically 3 to 4% upon an area of the market, which over the long-term time period, over a 75-year period, as you mentioned before, that outperforms the larger companies, that could be a compelling case from an asset allocation point of view.
The paper also compares microcap investing to private equity, higher return potential, earlier stage companies, but with better liquidity and lower fees. Can you expand on that comparison?
Yeah, and we actually wrote and I will highlight my colleague Matt Neiman wrote a paper on this, and I believe it was 2020 or 2021. So the case for public equities as a proxy for private equity, you get really interesting upside opportunities, but then you also get it daily priced. So we think that, especially when you think about private equity on an unlevered basis versus public equity on a long only basis, the returns over time are comparable. And there's also the premium associated with M&A activity in microcaps. So it's historically what we've seen is a decent amount of M&A activity, and you also get generally larger premiums for smaller companies versus M&A activity up the market cap spectrum. So you're paying up for a really small, interesting company with interesting new technology as a larger firm. We've seen that there's just more willingness to pay up in terms of the premium over the current price. So that's also been contributing to the returns that we've seen over time in microcap.
So one trend that we've talked about a lot amongst our colleagues and cohort here in microcap is that we get worried every single year that less and less quality businesses go public earlier on in their life cycles. They're just they're waiting longer. They think valuation will be more if they stay private. And, it might be in some cases, but as a result, it's you have investors that are looking, everywhere, which maybe would have naturally happened anyway, right? Is going to look in other countries for interesting opportunities and ideas. But it's just so curious that in the US, there's biggest, most, largest capital market system in the world. And, some of the best investors in the world that I know, not to say they aren't looking in the US too, but they're like, well, there's not as many quality businesses going public earlier on. There's still quality here, but I know most of these names, I'm tracking them. Why not go abroad and see what else is out there that has some attractive valuation? So love to hear your thoughts on all of that and this
Yeah. I would highlight the microcap universe is vast. I mean, we have, it's about 1,500 companies, I think, as of the middle of this last year. So it's still a very large universe of companies. So in the sense of it still having great opportunities within there, I think that's wonderful. We also you have companies that come down into the space, so that you have small cap companies or mid cap companies that for whatever reason, kind of, we call them fallen angels, come down, they trip up either, or their industry's out of favor, so those become opportunities. And then the other thing too is, I mean, it is very much we think of microcap on a global basis. I mean, you have, and you kind of alluded to it, you have a vast universe outside the US. You have over 4,000 companies in developed markets, almost 4,000 companies in the developed markets outside the US in microcap, and then another 3,400-ish companies in emerging markets in microcap. So it's a vast universe, and we do feel as if these trends cycle in the sense of so becoming public and having reporting standards and being daily priced. There is value to that, and we do see that as still a very vibrant part of the universe.
Yeah, which we'd like to see more in the US. It'd be nice. Most other markets, they make it seeming, their venture markets are a little bit more friendlier and easier to go public. It's not as cost just depleting, I guess. It very much is in the US. But you also mentioned catalysts that could drive a revaluation in microcaps, things like M&A, interest rate shifts, and fiscal policy changes. Which of those factors feels most important in the current environment?
Yeah, the interest rates. I mean, the market has really traded on just potential for lower interest rates. We feel like that's been one of the catalysts. And, frankly, and historically, what we've seen, I think this is in line with history too. The first move is usually driven by some of the parts of the market that are a little bit more speculative or tied to themes. But what we understand and appreciate being investors in microcap over multiple market cycles is it truly does come down to the company and the fundamentals over the full cycle. So we're excited that the markets are moving up and small and microcap are winning. The leadership of that's been tough from an active management basis, but sticking to what the fundamentals that we know drive returns over a market cycle, we know that the excess returns are going to be best when people continue to focus on their approach that is borne out through history.
Very good. All right. So, finally, with regards to the white paper, my last question on that is, you write that we're in the early innings of a long-term cyclical shift toward microcap. What makes this moment particularly compelling, and how should investors think about timing their entry?
Yeah. I'd say a couple things is, Wellington wrote a paper a couple of years ago. Actually, no, it was the end of last year, related to just the cycles of small versus large, and we dissociate that with microcap. And the cycles are usually 11 to 12 years. This cycle's been longer than that, 14. So, and you think about that, and then you think about the valuations, the relative valuations between microcap and large cap. They've been particularly extended, and you've had such a long time period. I think we have a generation of analysts in the industry that haven't seen a true microcaps, small cap leadership. So when you get eyeballs on a space that is then now turning, I think the power of that move, just given the valuation disparity, is incredible. So I think that's one of the particularly interesting parts of where we're at in the market. And even as much as we've seen the leadership thus far this year, it still feels like it's very early innings, especially when you look at valuation disparity.
100%. So, Doug, my final question then for you here today, it's specific to Acuitas. For those that don't know Acuitas, you guys are fund of funds. You guys provide capital to active microcap fund managers. You guys have a very thorough approach. I've talked to many managers that have talked with you. Everyone's like, I love Doug, everything like that, and Chris and the whole team. But at the same time, they're also like, man, they take a long time, for all that. So like I understand why, look, you want to make sure you're deploying your capital, correctly, efficiently, you got to do all your channel checks and everything like that. But how do you weigh all right, this is our process. Yes, we take a long time, but also potentially missing out on a talented manager that might have just had a bad year or a bad quarter or something like that. And you're like, all right, well, now we're not, I've been wanting to ask you that for a while based on some of the feedback that I've been getting.
Yeah, we love to get to know our investors and see them work in the specific buying and selling of their portfolios. Sometimes we can move quickly with the benefit also of knowing them from previous firms or kind of knowing their background or being able to see some of their background. But I mean, one of the things that we hold ourselves a high standard to with us is just making sure that we fully understand their approach, not only their approach to investing, but also how they manage their business and the infrastructure that they set up. And then also what the future looks like, that they understand some of the issues that they're going to end up running into, especially as they grow. I mean, the world changes as a strategy grows in assets, as a business becomes more successful. So we want to make sure that we understand every aspect. We can move quickly, and we have moved quickly to invest early, but that takes, as you've noted, we want to have lots of discussions and evaluation and analysis. And we pride ourselves in working with products at a small asset base, and most oftentimes that leads us to small firms. So in the sense of also being able to be a resource to those folks, that we appreciate that they're dedicated to the space, but also that they are also going to want some perspective on what the future is going to look like as an organization, especially as they kind of hit new milestones in terms of the business growing, being able to add people and other elements to their business as they need. We also want to be that resource to the managers so that they're as successful as possible, and ultimately with the hope that their success is directly tied to our clients as they are in one of our client portfolios.
100%. So what's been most interesting right now? And I mean, I don't know how often you guys think, I mean, I know you have your disciplined approach of what you're looking for, and, obviously taking the time when you get to know them so that in any industry, any time period, you feel comfortable in allocating that capital to that manager. But what's been most interesting right now? I mean, has there been any ideas or strategies that have been more specific to one sector that you've been finding interesting, or have there been any strategies that, have an interesting trading option style? I don't know, I'd love to hear what's been most interesting right now.
Yeah, I think of a couple of things. First and foremost, the manager that's truly diving into the most obscure part of the market and finding the gems, that's always interesting. And that never changes. And frankly, as the pressure gets more intense on the smaller firms as the bigger firms continue to take more of the market share, finding those that are really doing that is always tremendous. And there's more pressure to look like the other larger manager. So those that are truly staying away from that and focusing on what's going to drive returns, I think that's always interesting to us. I'd say on the other side too is just data. So you see a lot of, and I'm sure you see this too, where you set a lot more quantitatively oriented investment strategies. So those folks that are able to find interesting new information from, frankly, now what they can create data sets, and evaluate companies from a number of different aspects, and then also just evaluate the whole universe simultaneously, and the speed with which they can do that. That's been incredibly interesting. And also, working in the ecosystem, even if I'm not a quantitative manager, but I understand those that are investing alongside me and why they are making buy and to sell decisions related to their approach. I think understanding that ecosystem and those return drivers and how that's evolving. There's been a lot of quantitatively oriented money that's moved into the microcap space because it's a really interesting asset class. But also related to that, there are drivers of those types of processes that people need to be aware of.
100%. Well, Doug, we've covered a lot today. Covered the white paper, why you guys wrote it, why you updated it. And the message is still clear that there is a case for microcaps. But real quick, final thoughts. Anything you want to leave us with regard to microcap investing? Rest of 25 going to 26. What else has been on your mind?
Oh, I just want to appreciate your business, Robert, and what you do and providing a forum for dedicated microcap investors to assess management teams and then also collaborate with each other. I think that is of
Thank you.
of high value and increasing value, especially as we get to a place where there's just more distraction and also just the more pressure from the big businesses that are having people focus on bigger things. So I'd say that, and then also just we want to be a resource to the community. So if you're a microcap investor that's out there, if you haven't reached out and talked to us at Acuitas, we'd invite you to reach out to us via email, or if you're out this way in the Seattle area, please stop by. And two, you don't have to have a set up business. If you're someone that's thinking about setting up a business, we'd love to be a resource to you, just to give you some perspective on the things that we see and the things that we've learned over the years working with small businesses. So we think it's one of the most interesting areas of the market in terms of the opportunity. And like you mentioned, Robert, we'd hope that more really passionate investors that want to manage money for people and generating returns, that they would come to this space, because it is one of the most interesting spaces and one of the few spaces left where you have the potential to generate an edge on the consensus.
Man, oof, that was a beautiful way of ending it. Nice work, dude. Well, Doug, always a pleasure. Thank you for joining us today. Real quick, the website, it's acuitas.com, right?
Yeah, www.acuitasinvestments.com. We have a white paper section we've written. I mentioned the case for microcap. We also have a case for international small microcap, a number of different elements from an active management basis on microcap. So yeah, happy to be and if you don't see it there, please reach out and ask us the question. So always happy to write on items related to microcap.
Very cool. Doug, again, thank you very much for joining me today. Really do appreciate it. Good luck, stay safe, and I look forward to our next conversation.
Thank you, Robert. Take care.
Thank
Bye-bye.
you.